Srini Pajuri is senior semi-analyst at Raymond James. He's got a 170 price target on the stock. Why do you think there's some selling off here? And Srini, is it even significant given that last time around, I think the shares were down 6-7% on the results, and then they still rallied sharply into this quarter?
Yeah, Kelly, we don't think it's all that significant. First of all, the demand itself is very strong right now. One indication, actually one big positive surprise in the quarter was that if you look at the Hopper demand, the current product that they're shipping in Q3 and also into Q4, that grew 5 billion sequentially. That's the fastest growth in the last 4 quarters. In the last 4 quarters, Hopper growth has averaged about 3.5 billion. And in 3Q, it was 5 billion. And usually what happens is that when there's a new product coming out, there's always this concern about a slowdown in the older products, but we're not seeing that. So that tells me that the underlying demand is very strong. And as you said, supply is the main issue for the inline-ish outlook, and that's something we were expecting. So, we think the demand is going to continue to outpace supply for almost all of next year. So if anything, as long as the cycle extends, we actually view that as more of a positive. So we're not worried about, a small pullback here.
Srini, can we kind of back out for a second and put this in context? And maybe you can use, what your direct experience throughout your careers as a kind of the witness point. It's so unusual for a semiconductor company to be worth $3.5 trillion. And are we, the valuation is not that rich. They continue to kind of match where they need to be with the market. So it all seems real. But is this sustainable as a part of the U.S. economy? Is it sustainable in terms of the semi-cycle? I mean, I would just love your thoughts on the significance of all of this.
Yeah, when you look at the market cap in a vacuum, it does look a little scary, and I'll be honest with you. But at the same time, you look at the company's profitability and the valuation, it doesn't look that bad. Historically, this is a stock that traded at about 40 times on average. Right now, it's in the low 30s. So the question is, how long this, AI-related spending will continue. Just listening to their customers, it doesn't look like we need to worry about a slowdown, at least for the next 12 months. Of course, there's going to be a pause at some point. We don't have visibility as to when that pause is going to be. And the other question we get is that, what's the ROI like on AI? Why are we spending all this amount, right? So I think the better way to look at it is that right now the competition is so intense among hyperscalers. That's what's driving it. It's not so much about ROI. I think the reason is that in tech, there's always one winner, right? If you look at any of the previous tech evolutions, there's always one winner. So I think the competition is going to remain very intense before we know who the winners are going to be. So that's not going to slow down. So I think it's a little too early to think about ROI from that standpoint.